All right, I'm here with Paul Thomas from Custom Private Equity, and we're here to talk about the dramatic assault on your wealth. Paul, welcome to the program.
Thank you, Chris. How are you today? I appreciate you having me.
Hey, absolutely. I'm doing very well. It's getting a little bit cold here this winter time, but we're going to make it through. Hopefully, a little bit better than some of the things I know we're going to speak about today. Can you give a little preview to what we're going to talk about today?
Well, over the last few years, since about 2008, since the meltdown of 2008, where we came dangerously close to living in the third world environment, the U.S. government has assaulted the wealth of the American populace, and they're doing that by printing money, and it's a dramatic increase in the amount of money that's being printed, and it's not showing up in the economy in ways that the average investor understands and sees. So today I'd like to talk about what has happened, what is happening and continuing to happen, and how it affects the wealth of the individual, how it affects my wealth, and how it affects their wealth as well.
Well, I'm really looking forward to digging into this because for me, I'm not doing this full time. I'm not able to spend all my time looking at all of this, but I've got some money in some markets, and I need to get educated on what's happening. There's a lot of change in the world right now, and I'm looking forward to hearing more about these insights. Paul, can you give a little background as to who you are and kind of where your experience comes from?
So I grew up in West Texas. I was born and raised in Abilene, Texas, and I worked for my father starting at about the age of 13. We edited financial advisory books. My father was a financial advisor, and he also worked in the oil and gas business as well. We published investment newsletters, and then I went off to college at Texas A&M and studied marketing and studied human psychology. One of our major publishing themes was human psychology and the stock market. So I studied psychology, and then I went back to school and studied geology. So now I have a background in money management, and we manage oil and gas funds, and we manage real estate funds, hard asset funds. So one of the things we're going to talk about is different ways to protect your wealth today. And that's the critical thing that we're trying to do is show people how they can protect their wealth from what the government's doing to them.
Hey, cool. Well, let's dig right in. I know that there's this daunting graph here. Can you tell me a little bit more about this?
Yes, beginning in about 2007, you can see over to the left that we had about $870 billion in assets that was owned by the Fed, and that was gradually climbing. You can see it was kind of on the gradual increase. But when the meltdown in 2008 started and the Lehman Brothers went down, the Fed just basically lost all control of the marketplace. We came incredibly close to a total meltdown of the economy. The federal government, to alleviate this problem that they had created with lending money to unsustainable borrowers, they started printing money and buying assets. And so we had quantitative easing number one started in about December of 2008, and then we went up we printed money and bought assets, and you can see how this chart is just dramatically climbing. We bought $2 trillion worth of assets in the first round, 2.2 trillion, and then we went up to 3 trillion in the second round starting in about 2010. And then the most dramatic purchasing of assets by the federal government, by the United States, issuing of federal bonds to buy assets. We've up to $4.4 trillion in assets today, but they continue to just print money and buy assets with dollars that were worth less than they were yesterday. And if you own dollars, if you're dollar denominated in the global marketplace, as most Americans are, you are suffering and you're really not feeling it. And we're going to talk about the disconnect of why you're not feeling it today as much as you should be.
Sure. Yeah. I mean, where's this money coming from is the biggest question that comes to my mind.
Yeah, so the government's just printing it. They're printing out $100 bills as fast as they can print them. This chart is the beginning of the major disconnect we're going to talk about. And the money supply has gone up to well over $10 trillion, $10 trillion with a T. In 1988, it was below $2 trillion. So it's multiplied 5 times in 30 years is dramatic inflation. But the government will turn around and tell you that inflation is non-existent. So we're going to discuss that a little bit more. The major disconnect is that we're printing dollars at record rates, and inflation is not, and the government says that inflation is non-existent. My stance is that inflation is present. It is a very large number, and the government's hiding it from us. And we're going to talk about how the ways that the government hides it from us.
So we talked about before we hopped on some interesting ways to actually look for this kind of thing, and how we might actually see this in the real world.
My favorite thing is the Big Mac index that we see published all the time. So a Big Mac has gone from $1.60 in 1988 to about $5.11 in 2015. So yeah, it costs about $5.50 for me to buy a Big Mac today. So that's the inflation rate. You can see since 2008 that the price of the Big Mac, the real world price of the Big Mac, has gone from $3.50 to $5.50. So it's gone up by over 60%. Well, that means that your dollars are worth that much less. So it takes more dollars to buy a Big Mac than it did before. So your buying power is less than it was in 2008, and it's dramatically less. And in the real world, it's 60 to 80% less, and in some cases, it's more than that, much more than that. So the government is still, as I said, hiding these facts from us. Although there's certain things they can't hide. They can't hide the price of a Big Mac, but they can hide other indicators like the unemployment rate, and they can hide other indicators like the stock market. The stock market is setting new highs. It was up 250 points the other day, and record highs in the last week. And it's just because the government's printing money. And when the government prints money, your buying power goes down, and your wealth goes down, and your wealth is being assaulted every day. And if you don't do something about it in a few years or a few months, it's going to be serious. And you're going to look at your bank account and you're going to say, I can't afford to do anything anymore because my wealth is all gone.
Wow. What's powerful about this is that the two all beef patties with special sauce and all of that, it hasn't changed a bit, really, since they first introduced it, right?
Right. Same ingredients, same way they put it together, same manufacturing process, and the price has just gone through the roof in the last 30 years.
If anything, their efficiencies have gone up.
That's right. That's right. They're more efficient. That's correct. And the American populace is more efficient. That's right. So the whole theme here is that your wealth is declining every day. And there are things that you can do in the marketplace to fight this and to prevent this and to help grow your wealth. And we're going to discuss those in more detail. So one of the ways that the government hides inflation from you, hides the state of the economy, is that they talk about how low unemployment is. In Texas, it's around 4%. Well, what they don't tell you, and what you as an intelligent investor need to know, is that the reason that number is going down and staying down is because people have quit looking for a job. I heard some research yesterday that over 50% of the people that were looking for a job in 2008 are not looking for a job today, and they're unemployed. A majority of them have moved into the disabled category. They're on disability. They're getting government checks. The disability rate has gone up dramatically over the last 8 years, and that's how they're surviving. They're getting small disability checks, and they're just living on meager means. A lot of them have gone into the Social Security system, taken early Social Security, and it's just the amount of government dole that is out there that people are taking advantage of is staggering.
I think there's a tremendous amount of people that are just also supplementing this sort of thing with what's going on in the gig economy, with like things like Uber and stuff like that. You can go out for a couple of days a week and grab a little bit of extra cash, but not so much that it would raise the eyebrow of Uncle Sam, right? So you can sort of make ends meet by doing some of that stuff, and maybe live a little bit higher on the hog than you ought to be.
Yeah, and that's exactly true. Uber's a great deal. Airbnb has been a fantastic boom for several people. I've stayed in Airbnbs. I understand that these people are struggling and they need ways to make their house payments without losing their homes. And Airbnb is a good way to do that. Ubers, and also, as you said, Uber is a great way. I talked to an Uber driver the other day. He's making $3,000 a month, but he's working 6 days a week, which is okay. I mean, that's fine. But he's living in New York City, so he's certainly not living high on the hog on $3,000 a month in New York City. The employment rate is just, everybody points to it and says, the economy's doing great. Look at this employment rate. And my answer to that is, well, you can make anything look good if you take enough people out of the marketplace. Yeah. And another statement to that is any company can make a profit and do well if they fire enough people. And I tell you, our economy is in a treacherous position today. And I don't mean to be the naysayer and the gloom doomer, but it's time that if you have wealth, you need to take action. You need to do something about this, because you're going to look up someday and your wealth is going to be gone. And it's happened. It happened in Mexico, and it's happened in the United States in the past. We'll talk about that a little bit more.
Let's look at this. What's going on in the stock market?
So it's interesting in the stock market. When the government prints money, the companies borrow that money and they use it to hide their weakness. They borrow money to pay dividends. They borrow money. I mean, there's lots of things that companies and the government can help them do to hide their weaknesses. The fact that their sales are not what they should be. The fact that the public in America is not buying their products like they should or like they have in the past. Apple's a perfect example. Apple stock's down dramatically over the last year and a half or 2 years because people are not buying the iPhones like they were before. The job market is so bad that they can't afford them anymore. So in the stock market, we go high. We bubble up like we did in 2008 with the housing crisis. In 2001, we did it with the technology crisis, with the technology boom and the following crisis. So I saw wealthy people around me lose 50% of their value. Now, I'm not in the stock market. I don't really buy public stocks. And I have in the past. I've traded millions of shares of stock in the past. But today I don't do it because the stock market is, in my opinion, as somebody that bought his first stock in 1969, I think the stock market is a pretty corrupt marketplace. And I don't really like the way that things happen in the stock market. And if you look at the way public companies are run, you would probably agree with me that a lot of those public companies are, they waste a lot of money, and our government wastes a lot of money too. So in the stock market, we step forward one step and then we fall back 2 steps. So in 2008, we fell back 10 steps. And the upcoming Fed bubble, which is what we're calling it today, is the Fed printing money has created a huge bubble in the economy. Most investors believe it's a prosperity bubble, but in fact, it's not a prosperity bubble. They're just printing money to try to manage the debt as best they can with very few tools available to them. So what we're preparing for now to move into some cash flow and some hard assets that people have to live is a move towards safety, a move towards security, and a move towards protecting your wealth from the next Fed bubble that's going to burst soon.
So with all this money being printed, and the inflation, and we talked about the Big Mac being a place to look, why is it so hard to look at when you look at the rates that they publish and all of that?
Well, it's hard to look at because they chip away at you. Until the last few years, they chipped away, 5% a year. Well, now they're chipping away 200% a year. So this problem has dramatically increased in volume and value for the wealthy person. The way I would explain this is you point to a 4% unemployment rate and you say that's great. But then you have to realize, again, as I said earlier, you have to realize that half the people that were looking for a job are not looking for a job anymore, and they're on the government dole. So well over half the country is getting a government check every month. Well, that's not the way America was built. And that doesn't really lend itself. The government checks are so small that it doesn't lend itself to the population being healthy enough to go out and support the economy. So China is experiencing this as well today. Their economy has slowed down. There are a lot of people are out of work in China, and they don't have enough money to go buy a new TV or a new refrigerator are things that will support the economy. They don't buy, they are buying new cars, but they're not buying new cars near at the rate as they were in 2007. So we're seeing this effect. It's a global effect. We see this problem in Greece. We see the problem in Italy. We see it around the globe, but it's really bad in the United States. So what drives the United States economy and the world economy too is that the populace is able to buy things. And in the United States and other countries today, the populace is not able to buy things the way they should. So it's gonna correct itself. And if you're not prepared for that correction, you're gonna be in trouble. Your wealth is going to decline dramatically. And it already has declined dramatically. You just haven't felt it yet. My wealth has declined. I mean, I own a lot of hard assets, but my wealth is declining, and I do things every day to counteract that, to fight that. I deal in real estate. I deal in oil and gas production. I'm building a solar farm today. A good solar farm is like a good oil well. It produces income for years. So those are the types of things we're working on.
All right. So what can we do? How is this going to affect us as an investor?
Well, the most dramatic thing is interest rates. If you're a bondholder, the value of your bond holdings has declined by 10% since Trump was elected. And if you don't move some of your money out of bonds, it's going to continue. As interest rates rise, your bond holdings are going to go down in value, and that means your wealth is going down in value. So that's a dramatic thing. That's something you can see every day. Even if you hold those bonds to maturity, which a lot of people say, I'm not hurt because I'm going to hold my bonds till the end. Well, they're still paying 3%, and inflation's 9%. So you're losing money every day. Just by holding your money in bonds, you're losing money. And people say to me, well, that at least I'm assured to get my money back. Well, that's not necessarily the truth either, because if you hold certain bonds, corporate bonds, and even some Fed bonds, the more the Fed prints money, the more worthless those bonds become. So that's not a very good position to be in.
Gotcha. So when you say that they could be dropping by 10% in 2017, that's because the Fed is taking certain actions. And you're saying that's because they're raising the interest rates? Can you expound more on that?
They did it in 2015 and undid it in 2016. So we expect rates, because Donald Trump was elected, we expect rates to go up. We expect the Fed to try to do something to regain some control over the marketplace, which right now they have little or no control over the market. I mean, we're in the negative interest rate environment for all practical purposes. Japan actually has been in a negative interest rate environment, and they've started issuing negative interest rates. So when you have to pay a bank to hold your money, that's a real telling sign. It's what we call a red flag in the marketplace. The quandary that we have is that the Fed has boxed themselves in to a situation where if they do one thing, it's bad. If interest rates go up, that's not going to be good for the bondholder. Their value, their wealth is going to go down. So that's one side of the box. So the other side of the quandary, the second part of the quandary, is that if they leave interest rates alone and they just print money, we have a picture of them printing money. If they just print money along the way and just their object here is to try to inflate their way out of debt. So in today's world, we have over 20 trillion with a T, $20 trillion in national debt. And they think they can print their way out. They also think that as money comes out of the IRAs around the world, that the taxes around the United States, the taxes on those IRAs are going to pay off the debt. Well, frankly, if you do the analysis, you know that that's just not true. There's not enough money, not enough tax money coming in to pay off the national debt that we have created. So we've created over $10 trillion just since 2008, just in the last 8 years. And that's a huge number. That's just a huge number. So Donald Trump, frankly, has been handed a really bad deal, as I would say, to try to deal with this. So quandary number 2 is let's print our way out of this. Let's inflate our way out. Well, when the government starts inflating their way out of debt, your wealth is going to go down dramatically. So in Mexico, I had a friend that was in Mexico in the early in the 1980s, and when they devalued the peso in 1982, he had $100,000 worth of pesos in the bank. In 1985, he had $9,000 worth of pesos in the bank. Didn't touch his savings. It devalued by that much.
Wow.
That is dramatic, and that can happen to you if you're not prepared. The only thing that saved him is he had some real estate holdings. He was able to sell those real estate holdings, move to the United States, become dollar denominated, and actually help protect what wealth he had left. But he lost over 50% of his wealth in 3 years. Dramatic story, and it's true. It happens all the time. It happened in Zimbabwe, horribly in Zimbabwe. It's happening today in Venezuela. It's happening today in the United States, but the government's hiding it from us. So here's an example of the devaluation of the dollar. So if you notice, there's only been one time in history, and that was during the World War, the end of the Depression, when the dollar actually gained a little value. But a $25 bill in 1900 buys less than $1 worth of product today. Mm-hmm. We've gone down dramatically. This chart is an interesting chart. It talks about the different crashes in the world wars and things like that. But it's just been a gradual assault on your wealth, and you have to be in assets that return 8, 10, 15, 20%, 30%, or you're not gaining any ground. You're losing ground. You're going broke. And that's what we specialize in, is we specialize in assets that do those that produce those types of returns. And our job is to manage the risk of those assets.
So if you just let it sit, where do we end up?
If you let it sit, one of these days you're going to look down the tunnel and all your money's going to be gone. And it's coming down the pike way faster than you think it is. This is one of my favorite movies. He tunneled his way out of the prison over a 20-year period. Well, the government's been tunneling through your wealth over the last 20 years, as the last slide showed you. The fact that when the U.S. government prints money, you can't stop it. You can't stop inflation. And they try to hide it from you. They try to do things that keep you at ease, keep you to thinking that they're taking care of you, when in reality, they're mining their way right through your wealth and all the way out into the river. It's a situation where you've got to take action or you're going to be broke. And my friend in Mexico is a perfect example of that. He didn't take enough action when he had assets to buy hard assets, and he went broke for all practical purposes. And it wasn't anything that he did. He didn't invest the money poorly. He didn't do anything. He just let it sit in the bank, and the bank took it away. The government took it away. So one of the things, there are many things you can do to fight this inflation and fight the assault on your wealth. And the things that we recommend is that you move into hard assets. What we would recommend is that you move into real estate. You move into solar farms. We're actually developing our first solar farm today. Solar farm throws off 8 to 10% return on an annual basis, very little borrowed money. So you're on the right side of both of those things. You're making money, and it grows in value into the future. So electricity is going to be a valuable commodity, as utilities are, for decades. We deal in all types of real estate, but our favorite piece of real estate is self-storage. In today's environment, you never want to be very far from venture. You want to be out there trying to find the incremental increases in value that come from new tools and new software programs and new hardware programs and new medical devices. Those are the types of things that we work in. And we review. I have a team of people that work in that continually, and they're looking for venture funds and new ventures that are inexpensive to get into, and that they're in their second or third round of fundraising, and they've shown that they're getting to profitability and getting to sales quickly. I mean, one of the most dramatic ones that comes to mind is the developer of the heart stent. We don't hold out for the home runs. We're looking for the incremental pieces where we're trying to take 10% of the revenue to the bottom line of a company and not trying to hit a home run. The key to this whole scenario is to be widely diverse. You want to be invested We've seen Vanguard, the big money management firm Vanguard, move from a traditional allocation of 60% in stocks and 40% in bonds to a 50-30-20 allocation now, where they're putting 20% into alternatives. And that's a very conservative number. If you look at the Yale endowment model, he actually took half of the wealth of the Yale endowment and put it into alternative assets. We keep our ears to the ground and our nose in the marketplace, and we work mostly in Texas in real estate, and then we in the oil and gas business and the energy business. We work all over the country.
Well, Paul, thanks for the overview. Some of the stuff you see happening and you think about, and some of it you don't. You really don't see happening until maybe it's too late. So I appreciate you bringing all this to the forefront for us. What's the one thing we can do right now if we want to take the next step?
Well, Chris, I appreciate you having the interview today, and I'm listening to my ramblings, but I have a different contrarian view than most people to the marketplace. And sometimes a contrarian view is exactly what you need to hear. The government's printed the money. There's no way they're going to be able to take the money out of the marketplace. So we need to have a wealth review. I call it an asset allocation review.
So for those listening on the audio program, what's that email address that they could send an email to?
So it's Paul, Paul, at customprivateequity.com. Yeah, and if you live in Texas, we can visit personally. I can come to your home or come to your business, and we can actually just sit and talk. That's probably the best starting point for us. So,
well, great, Paul. Hey, thanks again for coming on, and we really appreciate your time.
Thank you, Chris, and I appreciate having been on the air with you, and it's been great. Thanks.